welcome on board Alok Gupta, the MD at Allied Blenders and Distilleries, joining in on the show right now. Alok, hi, afternoon. Can you hear me clearly?
I can hear you loud and clear. Thank you for having me on the show.
Right. I just wanted to talk about, the kind of volume growth that you've seen for the fiscal so far, and it seems a little bit flat. Given the kind of guidance that you would like to set out for FY25 and what your peers have done, tell me what's the scalability that you foresee for this financial year?
For this financial year, the outlook that we have in the industry is like a single-digit growth. But within that, if you were to break up the industry between mass premium, P&A, and luxury, clearly the premiumization trend is extremely strong. We are seeing the premiumization trend across flavors. So for the FY25, we are planning to grow mid double digit. Within that, our mass premium growth would be single digit. That's our flagship brand, Officer's Choice. But our focus on Officer's Choice is on sustaining and growing our gross margins. Over the last few quarters, a lot of work was done to get the gross margin in line with the P&A segment. So Officer's Choice at a large base of 20 million cases will grow at a single digit, high single digit, but will maintain and grow its gross margin. We have three very powerful brand in the P&A whiskey segment, which is Sterling Reserve, Iconic, and OC Blue. All three brands put together should get on to a mid to high double-digit market share. So we're extremely happy with how Iconic is performing. It's a brand that's less than 2-year-old, already has done 2.2 million cases and running at an annual run rate of almost 4+ million cases. And this year, we will see a lot of action from ABD. On the luxury side, we launched Zoya, which is our first luxury brand in the gin segment. But we're hopeful of launching a couple of more in this financial year. So the guidance for this year is double-digit growth, largely being led by P&A and luxury segment and expansion of the gross margins.
Question on the expansion of gross margins. By how much can you do that? Because of course the product mix is turning favorable, and I would believe that a lot of those cost pressures might have peaked already, because of course last few months have been very volatile with respect to raw material. How much expansion do you anticipate on the gross margins?
We are hopeful that it should be between 2.5 to about 3% expansion on our gross margin this year.
To reduce your interest cost pressures, because of course of the IPO proceeds you have repaid some of the debt. Could you talk to us about what could be the impact on profitability? How much is the interest cost saving there?
Post the IPO, we paid all of the debt, and this year itself we will see reduction in interest cost by over 50%, and then on year-on-year basis we'll see significant reduction on interest cost. So this year we're looking at almost about 90 to 100 crores reduction in our interest cost.
Right. The other thing I wanted to talk about, the fact that you did highlight some of your, flagship brands. What exactly do you think the product mix is going to look like in, say, the next financial year, given that right now 37% of your total volumes are coming in from the premium brands portfolio?
Right. So I think we are looking at it from two lenses. One is the P&A lens in terms of volume and value. So we do expect that in this financial year, our value share from P&A hopefully will be 50% of our total revenue. So that's going to be a significant jump in FY25. We're also seeing it from the luxury segment portfolio. So there is about 12 to 15 million cases right at the top where ABD did not have any presence in terms of product portfolio, where we've launched Zoya, and we're looking at a couple of more launches in this financial year. So essentially, that's really how we are seeing our product mix. Focus on whiskey will continue because that is 65% of total consumption. But with Zoya and many other products that are in the pipeline, we'll also see ABD getting into non-whiskey segments.
Okay, thanks so much for that. And just before I let you go, last question that I have to ask you is with respect to this latest announcements coming in from Andhra Pradesh that they're opening up their doors, and they've reached out to some of the companies as well for the supply. Could you talk to us about whether you are one of the parties which have been kind of called out for this supply or not? Do you right now have any presence in Andhra Pradesh? Would you be looking at expanding there?
We do have presence in Andhra Pradesh, but in the prior period, our volumes in Andhra Pradesh and our market share were more than 2x of what they currently are. So I think the invitation by the government to invite all recognized players is a good news for us indeed. We have a large manufacturing base. We do over 2 million cases in the state of Andhra Pradesh. So we have an established manufacturing base, established brand. But as the retail gets privatized, the brands will get back to their true potential. So if all goes well, from what we are hearing, we should see a significant growth in the state of Andhra Pradesh for ABD.
mean increased competition for you? Because you were as it is then present in the state, now with other players getting involved as well. Wouldn't that mean more competition, and that you'll have to share the increased growth with others?
The competition mix will change considerably. That is important. The second and more important point is the retail currently is run by the government, right? So there is a great amount of influence on what gets sold to the customer. Once the retail gets opened up, which means it's private retail, then it's going to be about the strength of the brand. So at ABD, like I explained to you, that what we currently sell is just 50% of what we used to sell earlier. The brand equity in the state of Andhra Pradesh is extremely strong. And as the retail gets privatized, I mean, we have no reason to believe that no reason to believe other than the fact that we will see significant growth.
You're confident that the brand will take you through the competition, and the bigger important news is that at least the market is opening up and expanding. Thanks so much for making time and speaking with us. Time now.
If you like this video, then like, share and subscribe to ET Now.